And here we are.
All
Hey,
right.
man.
All right. All right. All right. Hey, do you ever feel like you're chained to your computer screen? You have to have your laptop with you every time you go travel so you can sit there, check all your stock prices and all this type of stuff. You're so doing that so much, you're afraid you're going to miss out on the next big move. Well, my mentor used to tell me, Dennis, be patient because the best move of the year comes around every 2 weeks. And one of the things that, what if I told you there was a successful trading way where that doesn't require your undivided, round the clock attention? Because if you're getting up in the morning and immediately checking your phone to see where your stocks are for the day, then, you know, you may have an addiction. No, no, I'm just kidding. Because I know there's some
Oh
people that
man, I was gonna say I've got my laptop sitting right over here too. Even
say,
though
there you
we're
go,
on the
Mike.
desktop, I've got to be plugged in at all times. No, that's
So the myth for the day, the untruth is basically you don't have to be plugged in all the time. But for whatever reason, there's this belief that more monitoring is better. So, hey, good morning. I'm Dennis Wilborn. This is Mike Lamothe. We are here to basically dispel trading myths and talk about trading truths. So, Mike, what do you think about this?
I used to be one of those people that were dialed into the market all the time, and I think looking back, I think that there were a couple of different elements to it. The one element was yeah that fear of losing money and thinking that if I'm there and I'm watching it, then I'll be able to navigate a turn a little bit better.
Yeah.
Um, it, I also think that there was an element of escapism in there, right? Because at some point the job was boring, didn't really care for the monotony of what I was doing on the day job, and trading gave me a little bit of sense of relief, a little bit of excitement during the day. So
Okay.
there was that element of it too. So I think that there's a famous Etsukoda quote that says that everybody gets what they want out of the market, and that's
Mm,
whether you're conscious of it or not. And so
wow.
back then, for me, part of what I wanted was a little bit of excitement during the day. Well, excitement doesn't necessarily lead to profits, and that's something that I discovered the hard way too.
Man, that is so rich. That is so rich. That aspect of so it can become that checking in on the market so regularly can be like an adrenaline fix or
Oh, sure. Sure, absolutely. And if that's what you want, it's there for you, right? It's just like walking into a casino and the lights are blinking and you have the red and green flashing there. Yeah, it can be an adrenaline rush. And if that's what people want, it's certainly there. Um, One of the things that I learned from O'Neill and Minervini and so many others from IBD in that space is that the good trading is generally boring, and
Mm,
people have said
yeah.
that too. And so that was something that I didn't understand for a very long time. Like, well, why should it be boring? This is so fun. I love diving in and reading all about these different strategies and tactics, and diving
Sure.
into other books, taking a look at the charts, consuming the news, all these things. How could this possibly be boring?
Mm,
Well, it's the reason why it's not boring is because I am busy not being focused. My attention is diverted from where it ought to be. It ought to be on process. Now,
okay.
are, uh, are all these other things news that and the other could that all be part of process? It could be part of process, but the way that I think about a solid trading process is that it almost looks like a pyramid where eventually you're going to a point
Okay.
and a point of focus. Now, if you're too widespread and you're consuming news over here and you're maybe you're testing an option strategy over there, and you're doing this kind of screening. You're listening to this guru, that guru, this paper, and you're kind of all over the place.
Yeah.
Then you're certainly entertained, but it's not leading you to uh, something that's going to produce profits.
That's very interesting. I was thinking about that aspect of. Now, you maybe have heard this story, but when they first came out with the ticker tape machine, and they put it out in the bucket shops, right, back in the Jesse Livermore days, right, and they started that the ticker
Yeah.
machine. Well, what they found was when they did a beta test, back then, they did a beta test with the ticker tape machine. And what they did in one of these bucket shops is they found out that the people who were listening to the ticker tape machine became where they traded more. Therefore, and most of them picked bad stocks. They were crummy pickers, but they go, aha, that noise, that distraction, that excitement stirred up the emotions, got the adrenaline flowing. And Freud was right. When we get emotionally charged decisions are based on reduced IQ, which means we're prone to make dumb decisions. And so once they found that out, then they distributed those out across the whole countryside, the ticker tape machine. And then the financial networks have done the same thing, because right across the bottom of the news channel, what do you see? The ticker tape, and showing all the prices. And I know I've gotten hooked in to watching that, the ticker tape machine. I mean, the tickers across the bottom of the screen. And so, yeah, just absolutely crazy. And so, well, what just in this area, what can a person do to? Yeah, well, first, before we get to that, hey, wherever you're checking in from, hey, just drop in your state that you're dialing in from. Glad you're on board with us this morning. And if you have any questions, just please throw the questions in there, whether it be about technical stuff, trading mindset things. But, don't be a ghost. Let us know who's out there. So, Mike, how do you handle this? I mean, because I think is it both psychological and also the mechanics of their trading, or are they more prone to do this? A person more prone to do this if they don't have a good written plan that they're following.
Bingo. And that's what was going to be my number one suggestion. It was going to be this right here. Take a blank
piece of paper?
page,
Okay.
blank piece of paper, and write out what your plan is going to be. When you come up with a trading plan, you could throw whatever you want in there. Right. So if you want to put in, all right, I'm going to check in on CNBC and Fox, and then I'm going to look at the charts throughout the day, and I'm going to do all these different things. Great. Wonderful. Write it all onto the plan. Right. Now I'm not suggesting that this is a good plan or not. I'm just saying whatever you plan on doing, write it down on the page. That way, okay, at the end of the day, okay, did I do what was on the sheet or did I not?
Okay.
And then you have a baseline to see, well, I did everything on my sheet. Did that lead me to profits? Yes or no? And, well, maybe day one it doesn't, but if you execute your plan for 100 times, it should lead you to profits after 100 times of running your plan, right?
Well, you would hope so. I mean, but the thing about it is, you will have a good database, a baseline to be able to determine, okay, what do I need to modify? What needs to be changed? Because I think it's Mark Minervini and also Mark Douglas says, at the end of the trading day or at the end, end of the quarter, ask yourself the question is, how did I do? What could I have done better? What could I have done? And so you're constantly observing without judgment, but asking the question, what could I have done better? Did I follow my rules and that type of
Mm,
thing? And if somebody's looking for wanting to build a trading plan, to me, it's very simple. Of course, I've been doing it for a long time, but there's 5 different pillars to every trading plan. No matter if you're a day trader, a swing trader, a buy and hold person, and that is one, you have to pick a good stock or ETF to trade. That's number one. What do you define? What am I going to trade? And you limit that. You may say, Bill O'Neill's, what did he say? He would go up to 8 different entities that he would be invested in.
mm,
So don't invest in too many. So number two, define where and when you're going to enter. Number 3, when and where you're going to exit. Okay.
mm,
These are all, that for both for a profit and your trailing stop. And then number 4 is, what strategy are you going to use? And number 5 is one that a lot of people miss out on a bit, is what are your expectations
mm.
for your trading plan? And if you start with that on your blank piece of paper that you just held up, Mike, then I would suggest then fill in the rest of the story about, okay, how am I going to do that? As you were saying, because I think that's brilliant. I mean, a brilliant idea. And then journal how you're doing at the end of the day. Start small. So what do you think? Okay, that's some of my thoughts on that.
Yeah. So what would be a good expectation, or what? Like, can you dig into that a little bit?
Yeah. I think that Dr. Thomas Carr talks about what is a good expectation for a profitable swing trading system. And in his book, he talks about the probabilities. And what
Okay.
he says that a profitable swing trading system should be able to generate about 40% per year. So that's one benchmark. Secondly, he said that your win-loss ratio should be between 60 to 65%. And so
Okay.
when I was building my system, I took that and just kind of said, okay, these are my standards. This is what I want to shoot for. Now,
Mm,
it's okay to go over, if I hit, 45, 55% for the year, that's great. And there may be things I can do within my system to tweak it to have it, perform at that higher level. However, heavens, if I hit, well, heaven, for the last 12 years, I've averaged 37%. So having that 40% goal and having a well-tuned, proven system that's been back tested, gives me the confidence both in the system, but also then the confidence come down to, do I have confidence in myself to execute my system? That and
mm.
developing that confidence is, that takes time also. But that's how I develop my expectations, and then I can measure against that.
Has that confidence ever waxed and waned through the
Oh, heavens,
years?
yeah. Yeah. Oh,
Oh,
God. Yeah.
and well, what led to some of that, and how did you overcome it?
Whew. Boy, we're getting deep here. Um, the When I first started trading, I kind of had this attitude of, how hard could this be, right?
Mm,
How difficult could this be? I don't need no stinking rules. I don't, I'm just going to throw it up against the wall because, I'm really a smart guy, right? I'm a smart guy. Um, and I know how to do this. So how hard could it be? And
mm,
then I got into learning how the emotions of money will just totally disrupt any thing you're trying to do with money. And also, what filtered into that was my belief system that came from, like, my mom and dad. Their belief system about money. They were depression babies, right? Depression kids, and that's why they grew up. And so they had a complete different perspective of money and all that kind of stuff. And also some religious things that came in about, the thought of went to a really strict church back then that misinterpreted what the Bible says, where it says the root of all money is the root of all evil. It doesn't say that at all. It says the love of money is the root of all evil. So anyway, all of that kind of combined to just totally disrupt me and throw me off course. And so I was dealing with all those feelings. And what I finally had to do was I said, I need a plan. And I, after reading Bill O'Neill's book about, gosh, a long time ago, probably 20 years ago, I read it for the first time. And he talks about building your plan, writing your rules, doing all that stuff. That's when I started writing my rules and then started refining that. As I continued to refine my rules, my execution, and then practiced the back testing and then simulated the trades. That's when I started getting over the angst of trading, the fear of trading, and then once I had all that in place, what happened is the old me would still crop up its head and kind of, take me off the track. It would basically, and so I would just, and that's when I had to deal with my anger issues. Guy, I've probably told you the story about one day I had a really crappy trade because I wasn't following my rules. And I went downstairs in our house in California and I just slammed this cabinet and this drawer in the kitchen so hard that it popped off the front of the cabinet, right?
Oh
And I
man.
go, oh, I'm in trouble now. And I'm going, and so Brandon, my youngest son was trading with me at the time. I said, don't tell your mother. Of course. And we got the wood glue and glued it back on. And other than Michelle hearing this story, she never found out until after, way over the fact. But that's the kind of things that would come up. So what about you? Well, in that area?
Yeah. So the biggest time that I was had confidence and then started to lose confidence was after my daughter was born, because I was trying to trade the same exact way that I was trading before she was born and then after she was born. And my trading routine would take a certain amount of time. It wouldn't take all that long before she was born, because it was optimized to be able to work while I was trading part-time. I'd do
Sure.
most of my work at night on the weekends, let the trades go during the day, and that would be it. And so I thought, yeah, this should be pretty well optimized for fatherhood, and didn't really give it a second thought. After she was born, my routine ballooned maybe about 6, 7 times. So what it was taking me before, it would take me maybe about 10 hours or so on a weekend. And the reason why was, you start and you stop and you start and you stop. Time to change a diaper, time to give food, put down for a nap, whatever. And so uh, that led to all sorts of inconsistency. And I struggled for about 6 months before I finally realized that, I didn't realize that I hit a breaking point where uh, almost got kind of got an ultimatum from Melissa, look, like something's got to change. And so thankfully I reached out to a few different people. Yeah, at the time. Uh, I reached out to Adam.
Right.
Adam Sarhan. Well, we were working
Yeah.
together a little bit. He actually took over a portion of my business at that time, and I started to uh, model some of his trades, right? So I outsourced the research portion.
Right.
So I was using his research, and I was able to then pivot the business to focus more on the educational parts of trading. And so that ended up freeing a lot of my time and put me back on the path of something that I actually enjoyed doing more.
Right
And,
on.
like I always enjoyed teaching and coaching and mentoring versus the hard research elements of it. And so by doing that, it freed up my time, and I was able to get back on track. Uh,
Okay. That's so.
but
Hey,
that, yeah,
go
go
ahead.
ahead.
No, what I was going to say is as we transition or get ready to transition into some of the next topics, guys, you want to hold on and you want to stay tuned to what we're going to, because Mike's going to be talking about here shortly. He's going to be talking about the mindset challenges that most beginning traders face, and I'm going to be talking about the challenges that most beginning traders face with their technical analysis and all that type of thing. So again, drop in a comment. Let us know where you're dialing in from. Really appreciate that. It only takes a minute. Or not even take that. It takes 15 seconds. Just put in what state you're coming in from, and we appreciate every one of you guys on board. As we kind of transition, Mike, um, I have a question. Okay, I have this perception that, or a question. Why is it that so many traders believe that they need to be constantly in front of their computer, or they're going to miss something, because I think that it goes into a situation of there's this misconception when anybody becomes a beginning trader, of there's this misconception of what they think they should be doing, but then there's the reality of what they should be doing to be
Mm,
successful, and the two are not connected. And that's where I think mentoring really comes in and helps, because it that way, you know I know you mentor, I mentor, we can help folks to avoid that pitfall. but
yeah.
but that's one of the things. Okay, so they think that, oh god, because they think a professional or a full-time trade for a living person. And I want to also blow up the myth of that concept of, when somebody has the goal of, oh, I want to trade for a living. No, don't have that as a goal. You don't want to have as a goal. You want to trade not for a living, but trade to live in the freedom of the lifestyle you deserve. So, and there's a slight difference there. So I'll stop this blathering here in a second. The other thing, the other part of the people who are stuck in that situation where I got to have more information, I have to have more information, I think it would do them well to go find that little book by Nicholas Darvis
Mm,
about making $2 million in the stock market. Absolutely phenomenal book. But he basically, he did all his trading. Matter of fact, he did all his trading while he was traveling the world as a dancer by telegram, and sometimes 3 or 4 days after the market would move. That's where he would put in his orders. So, okay, there's some meat on the bone on that, in those topics right there, Mike, that you might want to elicit on.
Well, sure. I think that a big part of what we were talking about in the beginning with the ticker machine and
Yeah,
hearing the little tick, 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 and then you see the tickers scrolling on the bottom of the television. Now you have alerts coming to you from your phone, from your watch, from every device,
yeah,
and there's things going off. And so you're in this constant state of distraction.
Hmm.
I think that that's one of the things that maybe people think that they need to be more active than they do.
Yeah.
And so it's almost like uh, if you wanted to, I don't know, reseed your lawn. Oh well, would you put the seeds out there, water the lawn, and then just sit there and watch?
Yeah.
It hasn't grown yet. Well, I've been sitting here for an hour.
Yeah.
Let me water it some more and wait. And you know, maybe I don't know how long it actually takes for the little blades of grass to start to grow, but maybe you're sitting there for a week and you start to
Yeah.
see the blades of grass grow, and it's just like, man, this is taking forever. But if you just let it do its thing, well, grass actually grows pretty quick. Only a week.
Yeah.
So perhaps part of it is coming in with the proper expectation
Oh, that's
and
so rich.
understanding uh, and having confidence to be able to do it. Right? Like, did I know to not just buy the bag of seed, just dump it in a big pile and leave it there?
Hmm.
Do I have the skills? Have I learned well what I'm doing?
Yeah.
Perhaps that's part of it too.
Are you planting the right kind of grass?
I'm planting the right kind of grass. That's a great one.
Yeah, that's what I was thinking about because some like I know up in the northern states that you have a certain kind of grass that grows better, but in the southern states you have another type of grass that grows better and all that kind of stuff. And in California they smoke all their grass, but that's another story. Anyway,
Dennis has
cool,
jokes today.
huh?
Dennis has jokes today.
I guess so. Hey, Mike, let's go ahead and segue into that mindset challenges that most beginning traders face, and what are some of the things that they can do to, what are they, and then what can they do to avoid them, or basically get past them? Because just because you face a fear, let that fear become a challenge, and then you get over that. And it's just like building up the muscle when you're working out. And so what are some of the major fears?
All right. Well, I think we touched on a couple of them. There's the fear of losing money,
Okay.
and I think that one of the ways to help that fear of losing money is to segment a portion of your capital that's just going to be used for trading, and so it put a tax on yourself, right?
Mm,
Put
yeah.
put a small tax on yourself. If you're even if you're putting away, I don't know, 5% of your uh, capital of your paycheck,
Right.
5%, 10%, well, whatever it's going to be. Take that, earmark that okay, this money here is for trading and nothing else. So it's either
Okay.
just going to sit in the account and do nothing, or you're actually going to start to use this. Okay, great. So it has that purpose. So it doesn't have the same level of attachment of, oh, well, now I've got to buy groceries, or I need to pay for the mortgage or send my kid to college or whatever with that.
Okay.
So that's one way to start to have detachment from fear of losing money. Another fear or another problem that people face is the overwhelm from information overload.
Mm,
We touched on that too with the tickers scrolling down the screen, starting off with your blank page, writing well what is going to be a part of your plan. That's one way to start to gain clarity. And you don't have to start from scratch too. A lot of people think that they need to start from scratch. Okay, well, I just listened to this podcast with Dennis and Mike, and I want to try to think about what things I should put in my plan. Well, you don't need to
right.
start from scratch. There's people that are successful that have done exactly what you're trying to do, that have already done it. Model
Yeah.
them. Model what you're doing.
Yeah.
Model what some of what I'm doing. Right?
Well, no, exactly, because I know you are okay. I offer my rules on one page, and I'll give that to anybody. It's a great starting point, and I know you offer things. Offer similar type deal with what you do to get people started. I mean, uh, and I agree with that wholeheartedly. Part of the big deal is again, it's one of those misconceptions when they try to start trading that I have to figure it out myself. The stepping stones for successful trading have already been laid out. So stop stepping in the water. You don't have to. You can step on those stepping stones and they will lead to profitable trading. So, okay, I'm done. Go.
Yeah, yeah. Build your environment. If you're going to listen to something every single day, make sure that it's good.
Yeah,
And try to block out as much of the noise as you can. So, well, we were speaking a little bit offline. Like I started to send out daily emails instead of doing a weekly newsletter, and it's not like, oh, here's a stock pick or things like that. It's giving the philosophy.
yeah,
So that way, if you're focused on things, let it be on the things that are going to help you succeed. Well,
right on.
over the weekend, I was talking about the Tower of Babel.
Mm-hmm.
Right now, well, what does that have to do with trading? Well, at one point, uh, everybody spoke the same language, and they were able to come together and build this tower. And but there was a big problem with that. The problem with everybody talking and building this giant tower was that they took their focus off of where it was supposed to be, God, and that upset God, and so now
Right on.
it dispersed everybody. There's a couple of different lessons in there that I took away from it. Well, one of them is that if you have one language or one process, right, like you're following
Sure.
uh, your trading plan, then you're able to succeed. But if
Mm-hmm.
your attention diverts from where it's supposed to be, right?
Right.
If you're a trader, your attention is not on your process, your attention is on your P&L.
Yeah.
Then that's something that's gonna throw you off a cliff.
Right on.
So,
Those are all awesome. Did it reminds me, Mike, of the thing that Mark Douglas used to say in his book, Trading with the oh gosh, yeah, his Trading Edge book, um,
trading in the zone?
Trading the Zone. Yeah, he says, ask yourself a question first thing in the morning when you're ready to trade, and ask yourself, am I ready to give myself money today? And he says, if the answer comes back as I don't know, or no, or maybe, don't trade.
Am I ready to give myself money today?
Yeah, that's one of the things he
That's
asked.
an interesting phrase of the question. I would imagine most people out here, right? I'd love to hear from the live audience. Would you say no to that question? Like, I feel like I'm ready to give myself money every day.
And so, well, yeah, well, but at the same time, what happens if you did ask yourself that question and came back as I don't know, or no, or is it sometimes a question that we even ask? And maybe there's 3 or 4 questions that traders can ask themselves on a daily basis
Hmm.
that because I know in athletics, the mental preparation and the exercise of basically visualizing what they're going to be doing is very big. Well, we can play the same type of scenario with our trading
Hmm.
to be ready. I mean, because I
Yeah.
know that in the athletics that I played um, back in the day is we would always be psyching ourselves up to get ready, get ready, get ready, get ready, get ready before we would go out for the games. But they've elevated the psychology, sports psychology up to such a point. Now they're also making it part of the actual practice to practice the mental getting ready. And so, just a
Hmm.
thought.
So that maybe that's a good part of the question, like part two of the question. Right. So part one of the question is, do you want? Are you that? Do you want to give yourself money today?
Yeah.
Yes. Do you have a plan to give yourself money today?
That's good. Yeah.
How are you going to do it? Right? Because if you answer the question like, yes, I'm ready for money. How am I going to do it? I don't know. Then, well, you better find out.
Excellent. And so we'd have a part one and part two. Well, like, I know you talk a lot about when you're discovering your why to take that down about 4 or 5, 6 levels until, and that will finally answer, you'll then be getting to the root why of what you're trying to do. So that's cool. So, um, anything else on the new traders and their mindset?
Um, well, let's see here. How about impatience and the desire for quick wins?
Hmm.
I think that that's something that, uh, especially when you're new, I think that's something that goes back to the expectations. Uh,
Okay.
you find out about trading, you find out that you could make gains fairly quickly. Let me put my money into the market, and I'm hoping to make gains right away. That's
Mm,
not. If you're trying to make money with trading, I don't think that that's the proper use of trading.
mm.
I think that the market is a great place to grow money, not really to make money,
That's, yeah, excellent. Yeah.
right? So if you put money in and you're trying to grow it, there's uh, already baked into that is that okay, this is going to take a little bit of time. But if I'm
Yeah.
going in there and I'm trying to make money, then I'm expecting a paycheck today or this week.
Right. And so,
Um,
hey, 1, 2, 3. Really nice to see you on board.
you're welcome.
Welcome. So cool. And okay, what about one of the things is, what about the aspect of dealing with emotional trading?
In what way?
Well, I mean, for when a new trader comes on board, they're typically excited about the what they believe the potential is, right?
Right.
And so it almost sets them up to do the kickoff for their trading career from an emotional level, emotional plateau. And that oftentimes leads to them stepping off the cliff to achieve emotional lows and all that kind of stuff. But then they try to recapture that emotional thing. So, what about, how do emotions drive trading decisions for beginners, and what can be done to minimize that emotional trading
Uh,
right from the get go?
yeah, the first thing that people need to do that they need to acquire skill sets, and then when they're going to test those skill sets, do it in a virtual environment. Do it in a paper trade first. Right,
Okay.
that's going to slow a lot of things down. Right,
Yes.
because I don't really want a paper trade, but if it's like okay, you have to execute 50 paper trades, 100
Right.
paper trades, however many it's going to be, then you're going to start to see how this game actually works. And
Yes.
maybe you're somebody that starts to do fairly well with paper trading, but it, if you give it 100 trades that you've got to execute, then that's slowing down the process. Like you're starting to put them on, and you're also learning other aspects, other skills that you need. Things like how to manage risk, how to properly size your trades,
Yeah.
uh,
Oh,
how to
excellent.
manage your trades, learn about portfolio heat, learn about progressive exposure, learn these types of terms and what they are, and how to use them. And then once you have your trades executed, uh, 100 paper trades executed, then at that point, you would be far more likely to have an appreciation of what actually goes into it versus the person that just says, you know what? I want to have some real skin in the game on day one. Let's just put money in because then that person's going to be far more likely to be focused on the P&L versus where their focus should be.
The process.
Exactly.
Yep. And I'm going to, I'm at a point in life where I really don't care if I piss anybody off or not. So I'm going to say something right now that will not probably wear well with some, but I think basically jumping immediately and trading real money when you should be trading simulated trades or paper trading, all that kind of stuff, for I'd say the first, at least 30 to 60 to 90 days of your trading journey is foolhardy. And I want to say it's stupid, but I won't say that it's stupid. But I'll just say that it's foolhardy to them to do that, because once it's lost, you can't, you have to replenish it by getting money from somewhere else, okay, to that account. But where with a paper account or a simulated account, all you do is push the button and all the money comes back. But because many people tell me, well, Dennis, I just don't feel it if don't have some skin in the game, as you said, Mike.
Right.
And my suggestion of that is you're going to be doing this a long time. Well, no, if you go about it the way you're wanting to do it, you're not going to be doing this for a long time, because you'll probably blow up an account because you won't listen to the sage advice of people like Mike Lamothe. Okay.
If could you imagine if people, if you went to go learn how to drive, right?
Right.
You take your learner's permit, and you take your written test. You study the book, you pass the written test, and then they're like, okay, here's your license. Go off and have fun. And those people were just able to get behind the wheel, no lessons or anything.
Yeah.
Be like bumper cars out there.
Yep. And so it's kind of like people who go out and try to learn how to play golf, and they immediately want to jump on the golf course and go play, right? And they are absolutely hacks, and they slow down the process of playing golf tremendously. But over in Japan, they literally, before they will allow a person to get onto the golf course, they have to, one, pass a test. They have to go through so many practice sessions with a professional, coach, to be able to step onto the course and play. And the thing about it is then they don't allow you on the best courses. They, put you on the mediocre courses. But the same type of principle apply. So let's slide into the next session here.
They really should do the same thing for trading.
Like Mark Minervini says, he says the cost of entrance into trading is too low. Yeah. So, hey, let's talk real quick on the challenges, because I want to show you guys something that if you're thinking about shorting this market right now, you may want a second thought. I will show you a special screen towards the end of this and just before we wrap up. But the question I have is, beginning traders face what are challenges beginning traders face with the technical analysis? And so here's 5 suggestions that you can. Understand market indicators. Now, partly new traders, they're looking at the charts, they're looking at the markets, they're going cross-eyed and all kind of stuff. And so part of the thing is to show yourself some grace and learn a little bit at a time. There's so many tools out there. One of the suggestions I make is don't add all of them to your charts or try to accomplish looking at so many reports and all that kind of stuff. Pick a couple. Add things to your charts. Start with first a naked chart and then add to that. And the other thing that they challenge is just interpretation of price action correctly. I suggest take a this is a common stumbling block of young traders, is I suggest taking a course or looking at some videos about trading candlesticks. They provide an excellent process for understanding price action. I love them. I am a candlestick technician, and I use them all the time. I've got a couple of great videos that cover that. And then the importance of learning how to follow an objective mechanical trading system. While a lot of people say, hey, we want to trade these automated systems and this type of stuff, automated systems tend to, maybe on the fast pace, they may function well, or for certain market conditions, they function well. But I encourage you, learn how to trade a mechanical trading system that has very clear objectives on when you enter, when you exit, and that type of thing, because then you can, that's where then I automate my trades using my fire and forget OCO orders.
Well, Dennis, well, what's the difference between a mechanical and an automated system? Well, what do you mean mechanical?
Mechanical is, I think Tom Sausnow says it well in one of his statements. He talked about that if you want true success in the market, learn to trade a mechanical system. Mechanical system is basically, you see it, you are looking for levels of support, resistance, candlesticks. And so you have some very defined objective measurements that then you're taking your setups and your triggers off of. And it's something that you visually see on the chart.
Okay. So how is that different than being a rules-based? And would you consider yourself to be mechanical? Would you consider O'Neill to be mechanical?
Yes. Yeah.
Okay.
Yeah. Because I mean, yes, his rule, Bill O'Neill had a lot of rules for both entering and exiting, but they're all based off of primarily price action.
Right.
I think that's where it comes back to. Mechanicals is really honed in on price action. Great question. So use technical analysis to set stops and targets is another area. And oftentimes that is so simple by, there's so many places to get some great ideas. You can go to Investopedia, you can watch my videos, you can watch Mike's videos where we talk about, profit targets, we talk about support, resistance, and this type of thing. And so that's an area where, learning that, I think that the first thing all new traders need to learn is to define support, horizontal support, resistance, and then define trend lines. Trend lines, which turns out to be your dynamic support and resistance off of that. And just having those three things, learning to do those three things on your charts, it can really help with your process. You'll notice that a lot of day traders, they don't have a lot of moving averages and all that kind of stuff, but they're basically trading ranges. You can extend their process or bring it back over to a swing trading environment, and it works really well also. And if you learn how to do that, it will improve your patience because you have to wait. And if you jump the gun, you'll know you jumped the gun, and your trades will also show it. And then also learn to look at multiple time frames. I function across 3 time frames. 4 occasionally. End of the month, I'm looking at my monthly charts just to see if there's any large price actions or candlesticks that are showing me that I'm getting a reversal. 2, then I look at my weekly and my daily. I look at those every day. My weekly, of course, doesn't finish until Friday. And so that's when it's painted its complete story. And then I use my daily for actually my entry trigger, and occasionally will drop down to like a 30-minute chart to refine that. But I'm a swing trader, and I have no business trading a 1 minute or a 5-minute chart with being a swing trader, because for 1 minute and 5 minute is simply noise. So those are 5 things you can do to improve your trading from a technical
Right.
standpoint. So, Mike, I want to share one thing.
Yeah, go for it.
May I? Okay. Hold on a
Go
second. Let me see if
for it.
I can. Let me see if I can find the decline here.
Yeah. We use the same time frames
Huh?
in almost the same way.
What?
The monthly, weekly,
Huh.
daily, the
Well,
30-minute. Yeah, we're using the same
that's because we're both brilliant.
stuff.
No, it's because we've learned lessons from our mentors. Um, and I want to show you guys. This is a chart. This is from Bar Charts. Let me blow it up here. And as you know, the market is kind of showing some weaknesses and this type of stuff. But this is a chart I use all the time. This is percentage of stocks on the NYSE that are above their 20-day moving average. There's a couple of places I want to point out to you. Every time this particular indicator gets below the 30 level, let me draw a line across here, but gets below the 30 level, I want to be on the lookout for a trend reversal back to the upside. Now, if you've never used this particular chart, it is almost uncanny in its ability to at least get one in the ballpark when there's a reversal. And as you can see, price actions right now, let me go back over here. I am down at about, my low today was 20.68, closed at 21.68, has not closed totally. But when I get down in this level, it happened also from a seasonality point back here on April 26th of last year. And April 26th last year, let me bop over to this chart, and let's go over here and just take a real quick look at the spiders and get rid of some of those drawings there. And April 26th of last year, look at that. No, let's go back over a little bit. April 26th. Okay, April 26th, right there. That's when it hit its bottom, but look at that. That's where we came back and hit the 8-week moving average, ran on a really nice run up to the upside. Where was the other one? 1023 was where it hit its other low. Go back to this chart. And where was this over here? Oh, there is, yeah, right there. 1023 is there and 1027 there. And so if you've never used this before, I would practice with it. But again, if you're down below the 30, that oftentimes is a precursor to bouncing up the other side. So Mike, I don't know if you've ever used that before, but there you go.
Yeah, that's something that I started to use recently, and I agree. Well, when there's a little bit too much momentum to the downside,
Yeah,
well, we tend to see some of these snapback rallies. And something else that I've noticed too, when the market is in a choppy zone, like it is now, versus say a steady decline,
right.
like how we were, say, I don't know, back in uh, April of 22. May
Okay.
22.
Hold on. I'll use was that there? No. Hold on a second. And so, anyway, we're going to wrap up also, guys, here shortly with the concept. I've asked Mike a question. April 22. There we go. Okay, here's April 22 on the spiders.
Right. And so if we're in a sustained move down,
Right.
then it can hang out down there longer.
Yes.
But if we're in a chop, if the indexes are in a chop zone, then we start to get some of these back and forth moves.
Right. And so, do you think we're in a chop zone right now, or do you think we could? Now, the one thing about that particular indicator I showed you on the 20 percentage of stocks above the 20-day moving average is just because it gets down to that lower level, it can stay down there for a few days, and also the price action on the indexes can also drop down a little bit more. So I wouldn't be surprised to see us on the spiders coming back all the way down to the 504 or even $500 level, and then bounce from there. And that would provide us, like I said, we're getting close to the seasonality of going into the spring to early summer rally. And so that could, as you said, it could just be a snapback rally. But with some of these leverage ETFs, that it's easy for you to say, that snapback rally could result in a fast 15 to 25% gain.
Yeah, absolutely.
So Mike, I know you've had all hour to think about it. What entity would you, if you had to make money, what entity would you trade right now?
Yeah, I would just call up my buddy Dennis Wilborn and say, "Hey, Dennis, well, what are you trading today?"
And so you're too kind. So, hey guys, if I had to make money, I mean, just literally had to make money, I would go two places right now. One, I would go to either TQQQ, and I'll explain to you why. One, TQQ, I know because I've done the background testing on this. I've checked its background stuff. I know that over the last, I think it's 12 years or since TQQ came into existence, that it typically has somewhere between a 3 to 6 times every year, it will do a run of 25% or more. If I can capture some of those runs, it will compound at over 100% per year. And I think I shared that in one of our past times together.
Yeah,
And so I know that. And so based on that, if I had to make money, I'm going to go to TQQ or its inverse counterpart, SQQQ. We'll take a look at SQQQ right now. SQQQ might give me an opportunity right here as I come off of the off the bottom here. I've closed above my 8-day moving average right there. Let me see if you can blow that up real quick. I've closed above my 8-day moving average right there. And so any pullback into that 8 would be an opportunity to get into a trade. If I close above the 8-week moving average, what am I expecting? The last time we closed above it, notice my momentum has shifted to the upside. The last time we closed above it was here or here, and it went on for a really quick little run. And that run right here was a quick 21% back up to the top of the Keltner channel. If one would have got in at the cross of the TSI here, and that would not have stopped out there, and that would have been a nice little run of about 28%. So those that's what I like about this combination, the TQQ and SQQ. And oh, by the way, if I didn't mention it, TQQ has an absolutely fantastic option, weekly options with excellent open interest if you're an option trader. So that's what I would trade, Mike.
Yeah, very good. Thank you for sharing that.
So, hey, man, I think we are just about the end of our hour. We've covered a lot of territory.
Yeah, we sure did.
And so, and both Mike and I would really appreciate it if y'all would just, share these podcasts with as many people as you can. Mike, the podcast is going up on Spotify now, right?
Yes, we have it on Spotify. It's on Apple iTunes, and basically everywhere you could find a podcast. It's there.
Okay. And then the other thing I would like to ask people is, who would you like? Let's, suggest some people that Mike and I could put on the hot seat to help them talk about trading truths or dispelling trading myths. I know, Mike, you mentioned Adam. I'm going to reach out for Jeremy Newsom. One, Jeremy is a really good trader, but secondly, I love what he's doing with the marriage ministry he has with his wife. And I know that that's something that's very important to both you and I, our marriages. And oh, by the way, this coming Saturday, my wife and I hit 50 years, man.
Oh, congratulations.
Thank you.
That's wonderful.
Anyway, so any parting thoughts, Mike?
Oh man, I want to get some marriage secrets. 50 years, that's amazing.
Yeah.
But as far as trading goes, yeah, be careful out there, and take the advice that was said here to heart.
Yeah.
And if you want more daily advice, I'm sure that there'll be links in the description to get onto your newsletter. People could sign up to my newsletter. Both of them are free. And if you're not on it, well, what are you waiting for? Get the free and daily inspiration.
And I encourage you also to get on get on Mike's premium service, my premium service. I think they are combined together. They're really, really excellent. So I encourage you to do that also. Mike has an awesome Discord server. We have AutoPilot has a wonderful Discord server that, and if trading can be a very lonely sport. So,
true.
Get involved with a premium service and then jump on board their Discord and the community, because the community will help you grow so much. So anyway,
Absolutely.
So I'm going to say aloha and God bless to everybody.
All right. God bless everybody. Take care.
See ya.